Right, what you can see here is the weekly performance, and what we've done is a map, and as you can see, virtually everything's gone up with the exception of one or two idiosyncratic things, some quite a lot. Apple 8.76% in the space of a week is obviously a significant rise, same with Amazon. Tesla, which will be a relief to many, I am sure, and the financials. But of course, we're not going to pick stocks based on purely momentum alone, because that's all this depicts. This depicts momentum. It isn't telling you anything else other than basically what has moved. So what else might we want to look at? Obviously, valuation is something which we know is inherently connected to future share price movements. So what would happen were we to look at valuation? Well, there's many metrics of valuation. One such metric is price earnings. And this is the price earnings of those companies based on what you just saw in the previous slide. So we've taken the same map and we've overlaid price earnings. And what you can see here, of course, is red means higher the valuation, less likely something is, all other things being equal, to move up. And you can see the diversified banks are in green. You can also see insurance diversified is in green. And actually a lot of the insurance companies and in that sector is in green over there. But in actual fact, from our research, we found that the price earnings ratio wasn't the best forecaster for price movements so far this year in any event. Price earnings growth seems to be better. And again, below 1 suggests undervalued, and we want greens. Now, if we look at the greens here, you can sort of see that, well, obviously with momentum, everything had gone up, but the energy stocks still remain to some degree undervalued. So do the diversified banks, and again, you've got insurance out there as well. And what you're really, I guess, trying to do is overlay all of those criteria. Now, there are other criteria. There's cash flow. For instance, there is revenue growth, for instance, as well. So we've only taken momentum and valuation, and that's already giving you some interesting names to consider. Tactically, we are holding more energy stocks. You know, you might say, well, wait a minute, Alvin, what the hell happened to tech? Well, we may well come back to tech. But for the moment, we're seeing both momentum and valuation from tech companies and from energy companies, and energy companies are the ones that we've been in, and not just because of momentum, but as I said, because of valuation as well. What about financials? Keeping a close eye on it. Tech, keeping a close eye on it, given how well it's been doing previous years. But it's not really the one which is moving the needle. And you can see some of the ones which might on one measure of valuation be green, but not on another, like farm, in which case, sorry, it's really needs to be green across more than one measure of valuation. Why? Why do you not just have one that you favor? Well, we don't know which one will continue working and continue having a correlation. So I'd rather just filter. After all, I'm not trying to predict the whole market. I'm just trying to predict how my 15 to 20 particular stocks that I pick will do. So I don't care how many I miss. It's to make sure that the ones that I do pick have a high probability of success. Thank you.